Hello everybody, my name is Steve Griffiths, the developer of the MTPredictor software program, and I'd like to welcome you all to this presentation on MTPredictor 8 at the Traders World Expo. So first I'd like to say thank you to Larry Jacobs for inviting us to do a presentation here today. Before we start, very quickly like to look at a risk disclaimer and remind you that all examples we'll be looking at today are hypothetical, no trades were taken. Also remind you there's a risk of loss in trading and investing. All professional traders know and understand that losses can and will and do happen. The trick is keeping the losses small. We'll be looking at some losing trades during the presentation as well. Right, let's have a look at our MTPredictor software. During this presentation I'll be mainly using our standalone version of MTPredictor, which is our MTPredictor 8, which is what you can see here, but we also have add-ons for NinjaTrader, NinjaTrader 8 and NinjaTrader 7. I'll briefly look at these a bit later in the presentation. Right, the first thing I'd like to start with is to have a look at something that tends to confuse people. When I started looking at the markets, which is over 30 years ago now, I started basically back in 1987. We'll be actually looking at a chart of 1987 as well a bit later in the presentation. So 30 years worth of experience looking at the markets, and we launched MTPredictor 16 years ago now, back in 2001. So we've certainly been around for a while. And over these years, one thing I've noticed is that markets go in cycles. What do I mean by that? Well, I've discovered that about half the time markets are random. In other words, they're either rallying or they're chopping sideways, and you can't really get any discernible or clear pattern. But the other half of the time they tend to be in a clearer pattern when you can get trade setups come through and the pattern looks clear. And this is one reason I think people struggle, is because they try to do analysis 100% of the time. So what we look to do is only look to do analysis when the pattern's clear. So therefore MTPredictor is not a black box system. We don't look to trade all the time, because half the time, quite frankly, you shouldn't be looking at the markets. So this is why I developed my own unique, what I call isolation approach to Elliott Wave all those years ago, to try and only look at the markets when you get a clear pattern. And within that, we've got, well, a couple of my favourite trade setups. The first favourite trade setup is, I've nicknamed it a Holy Grail. It comes onto our chart in our new software as an HG. Why do I like this so much? Well, in Elliott Wave terms, in a completed 5-wave sequence, the longest move or the strongest move is a wave 3. So the best move to trade is in a wave 3. So in other words, we want to try and enter a trade with a small controlled risk in and around the wave 2. I'm just going to put some larger degree pivots on here and just show you this pattern, how it unfolded. This is only a very short period of time ago on a 15-minute chart of the ES. So this is the live data here. This is only just a couple of days ago. So what we're looking for is we're looking for the market to make a wave 2, and then you can see make a strong wave 3. If I put the Elliott Wave major counts on, our software is able to do this for you as well. You can see this was found as a strong wave 3. This also shows you how Elliott Wave, basically as it's traditionally taught, breaks down, because after completed wave 3, Elliott Wave would then forecast a wave 4, then a continued decline down to wave 5, and as you can see, that's not what happened. So Elliott Wave, as traditionally taught, would get confused here and basically get in a bit of a mess. But as a trader, all we're interested in is a trade setup that has a small initial risk. In other words, when the losses come through, and they will, we'll see a losing trade here in a minute, the losses are kept small, but when the profits are large, they're large in relation to the losses. So this is what we're looking for. We're looking for the start of a wave 3, i.e. the end of a wave 2, and we know that a wave 2 tends to subdivide into a minor ABC. So if I right mouse click here and I do Elliott Wave Intermediate, you can see that's exactly what happened here. Is we had the initial correction, which is a wave 2, that subdivided as an ABC, that found the end of the wave 2 just before we got a strong wave 3 kind of move. And this is where this Holy Grail trade setup unfolds. If I right mouse click over our red cell bar that unfolded here, in fact if I use training mode and I go back to that bar there, you can see that's how it's found at the time. So if I right mouse click, do analysis, you can see this is how our trade setup is basically found at the time, where we're projecting the market is going to make a strong wave 3, but the initial risk is kept small. We use position sizing to vary our number of lots, contracts or shares, in this case to keep our risk less than 2% of a sample $20,000 account, which means on this entry and stop we'll be trading 5 contracts. So if there's a losing trade, you'll have lost what we call 1 risk unit. If it goes down to here and makes a profitable trade, the profit will be 8.5 times or 8.5 R. If we turn trading mode off, you can see that's exactly what happened with the market going down to that level there. If I go back a few bars, you can see we had a little triangle there. I'll just clear everything off. I'll just take those large degree pivots off as well so we clear it up. So I want to have a look at a losing trade because losses are important. If I jump back to that red sell bar, again we had exactly the same setup that looked to be a good trade setup. If I move forward, you'd have been taken in. If I move forward, you'd have been stopped out. Here, this would have been a losing trade, but that loss would be kept small at what we call 1 risk unit. So there, a losing trade, 1 risk unit. We move forward. Whoops, there's our one, so I've gone forward too far. There's our next setup. Again, the same initial risk, and as we've seen already, the market went down to at least the first target there, where the profit was 8.5 times R, or 8.5 times greater than the initial risk. So this is why I've nicknamed it a Holy Grail trade setup, because when the losses come through, and they will, they're kept small, but when the profits come through, ideally they're large. So how do we start looking for this? Because if you remember, I said that markets are random half the time and clear half the time. Well, to do this, we start the whole Elliott wave pattern at higher time frame support and resistance. This is not a new technique where people look at higher time frame analysis to then basically supplement their shorter time frame trade setup. So we tend to look at time frames between 3 and 5 time frames higher. So for a 15-minute chart, we'd go out to the hourly chart, and for this we put on support and resistance zones that are on the chart in advance. This is important, they're meant to be leading indicators. So I'll jump back to just before this high unfolded, and now we right mouse click on a pivot high. We use our decision point level, and as you can see, it's on the chart in advance. It's a leading indicator, it's there ready for you. Let's see what happened here. The market then went up, it then started to make a high, started to decline down. On our shorter time frame chart, that would be our wave 1, but the point being is that's where we start our Elliott wave analysis. We don't start it when the pattern's unclear, we start it when we start to get meaningful support and resistance on a higher time frame chart. The market then came down for wave 1, it then went back up for wave 2, and then, as we've seen already, came down for our wave 3. So if I right mouse click and let the software find our Elliott wave patterns, it does this automatically. You can see there's our wave 3. But you see what I'm doing is I'm only looking to start our Elliott wave patterns when we get meaningful support and resistance on our higher time frame charts using our DPs. Interesting enough, if I do a DP off this low here, again this would have been on the chart before the market got down there. Can you see how the market came down, was finding support in and around that level excuse me, before the market started to rally up. So that's why the Elliott wave pattern on the shorter time frame chart, if I go back down to the 15-minute chart, that's why our Holy Grail trade setup stopped in and around here and didn't make a wave 4, then carried on down for wave 5, because there was higher time frame support basically getting in the way. If you'd actually been trading this at the time, we have a trend indicator on the bottom here, red for down, black for in the process of making a reversal, and blue for up. Again, we don't look to use this to trade mechanically because, as I've already said, markets are random half the time, and therefore we only want to use this basically when the pattern becomes clear. In other words, meaningful support and resistance on higher time frame charts. As it came into the first target, we were beyond our grey band, what we call our strength band, so therefore we look to run the trade a bit further. We can either run it using our ATR stops, which is our red and blue dots here, or we could have looked to come out in and around our higher time frame support level here, because we would probably be anticipating higher time frame support, and if we'd done that, we might well be able to increase our profit up to just over 10R. So you can see why I've nicknamed this the Holy Grail trade setup, because it's able to find the end of the wave 2 in an Elliott wave pattern to then trade the wave 3, which is usually the strongest and longest wave. As we've already seen, there will be losing trades, but when the losses come through, the losses are kept small, and when the profits come through in this type of trade, ideally we're looking to have profits that are much larger than the losses. And this is what professional traders look to do, is they look to only trade when the pattern's clear, stay away from the market when it's not doing something that makes sense. In other words, when it's either going up or going sideways. In other words, the pattern is not clear. Only look to trade when the pattern's clear, and then get a meaningful trade setup to then have profits that are large in relation to the losses. So that's one of my favorite trade setups in MTPredictor. MTPredictor is just not an Elliott wave based software. We have other trade setups in here. If I go over to a Forex chart and have a look at a 4-hour chart of the euro, we also have a VS setup, which I've nicknamed as volume spike. It's where we're looking for the market to make a wide range bar, this one here, that moves beyond an important psychological level. In other words, this bar then broke below the previous low. It then reverses that level. In other words, it fails to follow through. The high volume on the initial bar would not be selling, as most amateur traders would think. It's actually buying by the professionals, and they look to move it in the opposite direction. Again, we have the advantage of having our decision point levels on our charts. Remember, these could be on your chart in advance. They're here before the market even gets there. It gives you an area of support or resistance where you're anticipating the market to make a reversal. So if the market makes a reversal at our decision point level, when the market has breached an important psychological high or low, and then fails to follow through, we're then anticipating the market is going to move strongly in the opposite direction. This is then the basis of our volume spike trade setup to then trade the bounce or the failure in the opposite direction. Again, we use position sizing. This time, again, using 2% of a sample $20,000 account, trading lots, or mini lots in this case because we're trading Forex. Again, the idea of when the losing trades come through, the losses are kept small, but when the profits come through, they're large in relation to the losses. This one here, as we reach the first target, our MTP trend again was strong, so we look to trail with our blue dots or ATR stop to then trail up and get stopped out in and around that level. The more experienced users would also look to couch this in the larger degree support and resistance. So for an 4-hourly chart, we'd look to go up to the daily, and again we place our decision point support and resistance levels on the chart in advance. So if I go back to before that low came in, you would either use this low here, which is the last low before the move into that high, as an area of support. As we move forward, we could also use that last little mini low there. Again, you can see it's on the chart in advance. So those two basically are in the same area. So I'll take that bigger one off and just see what happened here. That's where it came down to the low. As it starts to go back up, that would be the last pivot high. We place the DP on. Again, can you see how it's on the chart in advance? Let's turn trading mode off, and that's where the euro went up to and started to back off. If we go down to the 4-hourly chart on which we're trading, can you see how that VS setup came in at our larger degree support? So it makes sense to basically trade that as it's at a higher time frame support zone. That's also backed up by our MTP trend indicator. That's why we wouldn't be looking to trade that sell setup, because first of all it's against the large degree trend that's rallying up off this support into that resistance. Also our MTP trend is helping by telling us it's blue, so you want to go against an uptrend. This TS3 buy setup would be with our large degree trend, backed up by our blue MTP trend, and also on the way up into our large degree resistance area. Again, you can look to come out at the first target or run it into the higher time frame resistance. Again, looking to have profits large and losses small. Position sizing is the basis of our trade setups with an MT predictor, but the more experienced users could also use our manual tools within MTPredictor to uncover some more advanced setups. Say for example you're using stochastics or some other indicator and looking for oscillator divergence, and again I'll use our training mode. I go back to this low here. The market is now at a logical support zone because it's in and around previous lows. You can see there the previous lows there. Here's our low here, so we're basically in and around previous lows. We've got oscillator divergence. This is where we can use our Elliott wave tool in MTPredictor. If I right mouse click, do Elliott wave intermediate, it will find the Elliott wave pattern if there's one there. Again, we're only looking to use this on clear patterns. We have coloured zones here that, as you can see, automatically came onto the chart. If I take that off and I'll put it on again. Whoops, sorry, I didn't mean to do that one. That's the one I want to come off. These levels give you the areas of where the common Elliott wave patterns are most likely to end. As the name suggests, this is the minimum zone, this is the typical zone, and this is the maximum zone. In other words, if you're an Elliott wave trader, you don't have to worry about doing Fibonacci clusters. These are all done automatically in the software for you. After a completed 5-wave sequence, as we have here, which looks like the market's completing, the trade setup would then be the DP from the prior wave 4. You should go back to the prior wave 4, right mouse click, do DP, and as you can see that gives you an area of potential resistance on the chart in advance. You can then right mouse click and you can build your own trade setup in and around this using our manual risk reward tool. First, do the entry bar as it says, which will be off the high of that. Second, the stop bar there, and thirdly the target level. And as long as you've got a trade setup where the target carries a risk reward of 2 or greater, then it's a good trade to take. In other words, we're looking to find trades where the profit comes through is at least twice the losses. So this allows you to build your own trade setups in and around the risk profile. You can grab and drag this easily to then be able to change your risk profile on your manual trades. And as you can see, that's exactly what happened. Our position sizing is under our tools, accounts and risk. So you can set up different accounts in different currencies and different risk profiles for your different asset classes as well, whether you're trading currencies, whether you're trading futures, or whether you're trading stocks. Different accounts is great because if you're trading different markets, here this account is in dollars, but what happens if you're trading the DAX? So say for example you want to do a trade setup on the DAX, there's a resistance level catching the high. Again, you can do manual risk reward in and around whatever manual trade setup you wish, but the position sizing is done in US dollars. So in other words, if you're trading different markets that have different base currencies, then your position sizing is kept constant across those different markets. So in other words, the DAX is traded in euros, but your position sizing here is done in your account currency, which will be US dollars. We have a drop down that you can then change that, and obviously if you're trading euros, there's the tick size in euros, or if you're trading in British pounds, it will automatically adjust the tick size in the background to then be able to do whatever account size you have and risk profile, but then your position sizing in pounds. And you can see as if your risk is too great for your current account size, it will tell you that as well, so you shouldn't be taking that trade. So in this way, the position sizing is kept constant across different markets that have different that are traded in different base currencies, so it keeps your position sizing constant. Let's go back and review very quickly this trade setup we had here, which was what we nicknamed our Holy Grail trade setup. Now this unfolded just a couple of days ago on a 15-minute chart of the ES. So is this a new trade setup? In other words, is it only just starting to unfold? Because I know a lot of modern analysts basically like to try and develop new strategies. But at MTPredictor, we like to use stuff that's basically stood the test of time. So is this a trade setup that's ever unfolded before? Well, if you remember, I said I started following the markets back in 1987. So this is a daily chart of the Dow Jones back in 1987. This is the 1987 crash that came right down actually into our weekly support. This was actually a screenshot taken in an old version of MTPredictor. It didn't have our Holy Grail trade setups in then, but you can see this is exactly the same principle. The market came down, stopped right at our weekly support. We had an initial move up. In Elliott wave terms, that would be wave 1. An ABC correction down there into a TS3 buy setup. That would be our Holy Grail TS3 buy setup, in other words, our wave 2. So back in 1987, the initial correction after the sharp fall unfolded exactly the same as we're looking at now, a Holy Grail buy trade setup. Let's go back a bit further in time, shall we? Here's the 1929 high. There's the 1929 crash. That's the initial correction down. In Elliott wave terms, that would be wave 1. The initial correction subdivides into a minor ABC. You can't see it on this chart, but there it's found as a TS1 setup on our MTPredictor. That would be our Holy Grail trade setup. That caught the decline down into the 1932 low. After that, we then had an initial rally up. Again, ABC correction down into the initial correction towards the end of 1932, start of 1933. That would be our Holy Grail buy setup before the market started to rally. So these trade setups have been around for a long time. So back in 1929, 1933, I've lost the last chart there. Back in 1987, again exactly the same basic pattern that we're looking at basically just only a couple of days ago on our 15-minute ES, where we have the market starting at an important high or low, in other words a higher time frame support and resistance. We're then looking for the initial move to be a wave 1, the initial correction to subdivide as an ABC, that will be a wave 2, and then we're looking for a strong wave 3 move after that. We also, as we've already said, we have our MTP trend indicator here. That's why we wouldn't be looking to trade that buy setup, because it would be against a red MTP trend, which indicates a large degree downtrend, which is backed up by the market declining off that resistance level. So that's what we're looking to do in MTPredictor. We're basically looking to find markets where the pattern is clear, and that only happens about half the time. And I think this is one of the big misconceptions that people seem to miss, is that markets are basically random half the time. Half the time you really won't get any clear pattern at all. So you have to wait until the market comes into a clear pattern. How do we define that? Well, we look to try and see when the market comes in and makes a meaningful reversal at our higher time frame support and resistance zones using our DP zones, which again on the chart in advance. We're then looking to have trade setups that unfold within those major degree support and resistance levels where the pattern is nice and clear. Our trade setups are based around the ABC correction. So you can see this TS3 buy setup on the euro again was based around an ABC correction. There it is, in the direction of the trend. But my favorite one, as I've already said, is the Holy Grail, because that comes in at the end of a wave 2. Let's have a quick look at our NinjaTrader add-ons. If I go to our NinjaTrader 8 add-ons, these are the same whether they're NinjaTrader 7 or NinjaTrader 8. You can see here's the same 15-minute chart. There's the same Holy Grail trade setup, and our analysis is placed on the chart in exactly the same way. In our NinjaTrader add-ons, we have a pro version of these, which is slightly more expensive, an extra $495 over the base indicator price, and this includes what we call our trade module. If I click on the trade button at the top of the chart, this then allows you to place your trades really quickly using the position sizing you have on your analysis. So if I click on the trade button here, you can see it will place the 5 contracts, which is what that position sizing would have calculated there, and your entry level. Once the entry level is in, if the market goes through it, the stop will be placed, and your profit orders will be placed as well. So it's a very quick way of being able to place our MTPredictor trade setups in and around our position sizing. Once you're actually in the trade, we then have tools here to be able to manage the trade as it goes in your anticipated direction. So this is a trades module that's available, part of our Pro package in our MTPredictor add-ons for NinjaTrader 7 and NinjaTrader 8. But otherwise the trade setups are the same in NinjaTrader 7 and NinjaTrader 8. If I go to Tools, MTPredictor, Accounts and Risk, again here you can see you can set up your accounts in different currencies and different values, and again your risk profiles again. So this is the whole basis of what we're looking to do, is we're looking to keep our initial risk or our losses under control by using position sizing. In other words, we're only looking to risk a small amount of the capital each and every time. We understand that losses can happen. We understand that when losses come through, and we've seen a loss in the video here, that when the losses come through they're kept small. We call this one risk unit. But when the profits come through, we're looking to have trade setups that are large, but not large just in dollar terms, but large in relation to the initial risk. In other words, we're looking to have trades where they have large profits and small losses. This is the way to this is what professional traders aim to do. Let's go back and have a look at our MTPredictor version 8. We have lots of other tools in the software as well. We've seen our manual risk reward tools. We've also seen these DPs that can be placed on the chart in advance. We also have the ability to place our WPT or wave price targets on the chart in advance as well. So say for example you're back here and you're anticipating that the market was then to make a wave 3 decline. You can use our WP tool or wave price target tool to then project in advance where these areas are. So if you're looking that you can do a wave 3 down, you can make 3 clicks on the chart. One at the start of wave 1, the second one at the end of wave 1, the third one at the end of wave 2, and as you can see it will place a coloured zone on the chart where the Fibonacci cluster of the Fibonacci, or the cluster of the Fibonacci ratios that make up that particular zone fall on the chart. As you can see, it's really easy to do. And then from there you can actually build manual trade setups in and around that as well. So you don't have to wait till the Elliott wave pattern has completed. As you can see, oops, trying to do that one there. You don't have to wait till the Elliott wave pattern is completed. You can project in advance where these Elliott wave patterns are likely to end as well. So for the more experienced users among you, you can then build trade setups in and around these as well. As we've already seen, our DPs give great areas of support and resistance on the chart in advance as well. So there's lots of ways that you can use MTPredictor above and beyond just our automatic setups if you're a more experienced user. The MTPredictor 8 version also allows you to tile charts like this, allows you to grab and drag charts around any way you wish to make them stacked and as you wish. You can also have workspaces, as you've seen at the bottom here, to have those tabbed. Just put that back again there. We also have a scanner that you can then load markets and time frames in the scanner as well, and that will give you an indication of when trade setups are going to come through as well. As far as data feeds, if you send us an email, sales@mtpredictor.com, we'll be able to talk you through the data feeds that are supported in our MTPredictor 8 version. It's the main ones: IQ feed, eSignal, etc., etc. Obviously with NinjaTrader you can use what data feeds you wish if you're using NinjaTrader. So to summarize, what we're looking to do is we're looking to follow the markets, but understand they go through cycles, understand that about 50% of the time the markets will be random and not in a clear pattern. During the 50% of the time when they are clear, we're then looking to see whether the markets react off higher time frame support and resistance zones, and then within that use the guidance of our MTP trend color-coded indicator to get trades that fall in the direction of that large degree trend. We then understand that there will be losing trades, but the losses are kept small. They're kept small by the use of position sizing. That position sizing is kept constant across different markets that are traded in different base currencies. We're then looking to have trade setups that when they unfold, the profitable trade setups are large, but not large in pure dollars, are large in relation to the losing trades or the initial risk. In other words, we're looking for small losses and large profits. We also have other trade setups. Oops, sorry, I'll go back a bit further back here. We have other trade setups that are not just based around the Elliott wave patterns, mainly the ABC correction. We have our VS or volume spike trade setup, where this is a spike beyond an important psychological high or low. The market is then reversing, but not reversing anywhere, reversing at our decision point support or resistance level. That then gives us a trade setup to go in the opposite direction. If I place the analysis on here, you can see that was our VS trade setup. That would be in our target, and again using the correct position sizing to keep the initial risk small when the trade goes wrong, but the profits large when they come through. This VS setup is aimed at trading what we call a fake out, in other words, a move by professional traders beyond an important psychological high or low that then reverses sharply, fakes out the amateur traders, moves strongly in the opposite direction, and that's what we're aiming to capture in them. So as you can see, MTPredictor has several different trade setups based around my unique isolation approach to Elliott wave, where we're only looking to trade when the pattern's clear, based around some volume based setups as well, and also has lots of manual tools that you can then make use of our position sizing. Oops, just do the manual tools. The position sizing around trade setups of your own creation, but to use the position size to calculate the number of lots, contracts or shares, and profit targets, so you can trade with the aim of having small losses and large profits. That's the aim of what we're trying to do here with MTPredictor. Just pull this slide up again and move forward. If you've got any questions, please do email us here at sales@mtpredictor.com. We're more than happy to answer any questions you've got, or have a look at our website mtpredictor.com as well. So do ask some questions, sales@mtpredictor.com. Again, my name's Steve Griffiths. I am the developer of the MTPredictor software program, where I started looking at the markets back in 1987. So with 30 years worth of experience, and MTPredictor itself was launched in 2001. So we've been going as MTPredictor for over 16 years now. So I've got many years experience in the markets and seen lots of things over those years. Hopefully you've enjoyed today's presentation. Again, any questions, do drop us an email, sales@mtpredictor.com. And I'd like to say thank you to Larry at Traders World for having us on to do our presentation and allows us to have a look at our MTPredictor software. This is our standalone MTPredictor 8. We also have our NinjaTrader 8 add-ons to be able to show you what MTPredictor can do. Thank you very much, Larry, and goodbye to everybody else.